Howdy, hot shots. It's the Dividend Daddy, your favorite, not a financial advisor with not financial advice. Made a couple plays today, and I also want to tell you about my Ulti strategy that failed. So today, the housing stocks, the new home builders, kind of had a run up on the anticipation that there's going to be a rate cut. I was able to sell out of my Lennar position, which was a small position, sold out of that with an over 30% gain. And I funneled all that money directly into QQQI because I told you I was going to be building that position in the future as well. So I'm starting to accumulate that. Rivian, I sold $15 covered calls on that, or maybe they were $16. I think $16 I decided to do. And took all the money that I got from those two contracts and bought a couple more QQQI shares. So I was able to build up a little bit of dividend paying income from my QQQI position. Alti didn't really have that rough of a day, but it didn't have a great day either. But I went and checked on some of my orders. I had this idea. I know I was talking to you guys about dividend capture. We've talked about options before on Alti. I wish that I was in a position where I was close enough to my break even and close enough to a strike price that I could get some value out of covered calls on Alti so that I could reduce my cost basis even further than the distributions have been doing. So I think after this distribution, my cost basis is right around $5.65 if you count all my reinvestments. But it's a little bit far away from that for me to be able to get enough premium on the 550 calls for me to break even. So I'm just still hodling, and I plan on holding. Hopefully there's going to be a couple of weeks where we get a little bit of a run up, maybe some stabilization, one or the other, maybe a little bit of both, so that I can get in the green on my Ulti position. And then maybe I would consider selling covered calls on the position to generate a little bit extra income to boot on top of the distributions each week. If I was actually like right at 550 for my cost basis and I could sell 550 covered calls, I would probably do that. So maybe you guys can consider doing that. There isn't, even if you go out longer term, there's just not enough premium in them for me to justify selling them. If I go out a few months, maybe I can get a little bit more premium, but then I would be stuck potentially holding the position in a situation where I didn't want to if I change my mind and want to sell it. And then I'm stuck holding on to them so that I can cover those calls. And I don't want to do that. So I'm still just hodling, hoping that we get a week or two of stabilization so that we can all get in the green or break even, or in some of your cases, make even more money. But I had this idea a couple of weeks ago, and so I put in standing limit orders. I wanted some downside protection on Ulti positions, and I wanted to accumulate more Ulti because it is a very sizable income if you have downside protection. So I thought, well, what if I could, and I'm sure everybody else has already thought of this before, but I'm going to tell you my results with it. What if I could sell deep in the money covered calls and just get the distribution while I'm waiting for them to exercise those calls? Now, I thought of a few problems right offhand with this. I thought they're probably going to exercise those calls just prior to a distribution. And so all I'm going to be out are my fees for trading the contract, and I'm not actually going to get any distribution. I thought that was a strong possibility. I have not been able to get filled on any of those orders that I have in place. And that was the second issue that I thought might happen. I was like, well, maybe I just won't be able to get filled. So what I was doing was I was placing standing orders for a covered call position. And maybe if I legged into the position, like if I bought the stock and then sold the calls, maybe I could get it filled, because I do feel like anytime I try to place an order where I have two different transactions that have to take place, it seems like it's a lot harder to get filled. But I have not been able to get filled on the covered calls for weeks. I thought maybe at some point in time it would get filled, but it just hasn't gotten filled. I was trying to enter the position at the strike price. So I was going months out putting in covered call orders with a $2 debit at the $2 strike price, a $1 debit at the $1 strike price. I had multiple orders in, multiple expirations, multiple strike prices, because I figured, well, if I can get into this position for the same price as the strike price, I really don't have any risk other than my trading fees, which I think is like $1.65 or something like that on an options trade, maybe 65 cents a contract plus a regulatory fee. I'd probably be losing less than $1 if I was able to get into one of these positions, but I had like 6 standing orders. So if I was able to get into all 6, I'm risking, less than $10, and I wanted to see what would happen so that I could share it with you guys. Because if by chance they didn't exercise the calls prior to a distribution, then I would be getting distributions at almost a guaranteed no loss situation, right? I mean, obviously, if the fund went down to 50 cents, then I'd be losing money on the position. But I had such deep in the money calls that I was trying to sell that I would be able to have so much protection that I thought it was a no-lose situation. It looks like I'd have to go down to like 95-cent debit or up to a $1.05 debit on a $1 strike in order to get my orders filled. And then my fear is that they'll just exercise the option immediately and make that nickel. And so I didn't think that that was a good idea. Maybe you guys can tell me if you've been in that situation before, if you've had covered calls on stocks that were about to pay a dividend and then they exercised them in order to get the dividend. I felt like with a weekly payer, there may be a chance that they didn't. If you were on a quarterly stock and there was an option that you had in play that didn't have any time value left in it, I feel like they would exercise it in order to get that dividend. I also want to know if you guys have ever had, I try not to have active options positions on stocks that are about to pay a dividend. So I'm curious if they adjust the strike price for a dividend that comes out, if that's ever happened to you before. So have you guys tried to enter a trade like this where you sell a deep in the money covered call and then you still get a distribution or a dividend? Because I would be interested in continuing to try to get orders filled that way or to leg into the position, but I wouldn't want us to do that and then miss out on the distributions and potentially, lose money on the trades as well. So that's why I was trying to do it first so I could test it out and then let you guys know how it went. But I wasn't able to get filled. For weeks now, I haven't been able to get filled on any of those orders. I check my account every day to see if I've accumulated an extra position in Alti and a short call, but it hasn't worked out. But if you guys are looking for some immediate income, I wanted to do a Lumen, LUMN ticker symbol, covered call today because I do have a couple hundred shares of Lumen that I have been wheeling. And I wanted to get into that first thing this morning because I noticed yesterday Lumen was up a good amount, but I was at work this morning and by the time I got on break, Lumen had already gone down to the point where I didn't want to do that because it does have a couple things in play. They're starting to work on sports broadcasting, and so I feel like that might be a little bit of a tailwind for the stock. So I don't want to sell my covered calls too cheap and get my stock called away when I could have a bigger gain. I'm also waiting for Disney. I was hoping Disney would break like the 119.80 price and then keep going up, and I'd be able to sell like 130 calls. Right now, I could go out about 50 days and sell 125 strike calls and get like $1.25, I think. But I'm just hoping it moves up a little bit higher so that I can get more premium out of that position, because I've had a position in Disney for a couple of years now that every time it gets close to $120, I sell a covered call and it goes back down. Then when it works its way back up to $120, I sell another covered call. And I don't really want to get out of the position necessarily. So I try to sell out of the money calls so that I could just get a little bit of premium and keep reducing my cost basis. Also on my target position, Target's got pretty high implied volatility right now because it's moved so far down in a short amount of time. My cost basis on target is pretty bad. It's like 121. And so I went out, I think I could go out about 120 days and actually get a little bit of premium on 130 strike calls. And so I'm waiting for a good strong up day on target to try to do that. And all I'm going to do is I'm going to get these premiums and I'm going to funnel them right into QQQI. And so if I run across any more kind of high volatility stocks that look like they've got a good return on premium, I'll be telling you guys about those so that you have the opportunity to do them too. But please leave a comment down below and let me know what your experience has been with holding covered call positions over a dividend date, an X date, so that we can see how that affected the strike price and see how it affected your position, if they exercised it early, or if you've been able to get into one of these deep in the money covered call positions, if you've been able to get your order filled and then still get distributions on that, because that would just be pretty dang awesome. WPay, the Round Hill Weekly Pay ETF of ETFs is out now. I'm going to start keeping a close eye on that to see if I need to move some money over to that. My YMAX position hasn't really done all that great. I did get a lot of payments today from multiple ETFs that I'm in, almost all of which are in the red, because I just started investing in these covered call ETFs a few months ago, and that was obviously a bad time to do it. It does look like the market is pricing in a 25 beep rate cut, and so it's even possible that they go with a 50 beep or 50 basis point rate cut. If that happens, I think right now the market is factoring in like close to a 9% chance that they'll go with a 50 basis point rate cut. So I do think there's some room for these stocks to move up if we get a 50 basis point rate cut. I think it could go either way if we get a 25 basis point rate cut, because it seems like the market's already priced that in. But some of these higher volatility, no earnings type or negative P to E ratio companies might get a little bit of a boost from any rate cut, because it means that the money that they're borrowing will be cheaper for them to get. And also it means that there will be easier money for other people to get, where they start coming off of risk off assets and going into risk on, which could drive the market a little bit up further that way too. So hopefully that will pump Alti for us and we can all make some of that money. All right, D-Gens, I'll talk to you later.